Your sales record may be the least useful number in your business. Adidas added 791 million euros in sales and 463 million euros in gross profit, but operating profit rose just 28 million euros. Cabo Verde tied Argentina in the 103rd minute of the World Cup. Argentina eventually won 3-2 after extra time. Now, the reason why I brought this into play is because the World Cup provided demand for both Nike and Adidas. And what that equalizer meant to me was real, because I was actually in Miami when I saw Cape Verde tie it up against Argentina. And it was a special moment considering I have family members that are from that small island. These are the moments in sports that a spreadsheet cannot price, but Adidas and Nike still had to put the World Cup through a business model. By the end of this episode, you will have one chain for tracing what survives, from attention to demand, availability, gross profit, operating profit, and cash, and which gate to check before funding more growth. So as a natural disclosure, I am a licensed CPA, but by watching this video, I am not your CPA. This is general education, not personal accounting, tax, legal, or investment advice. So now I'm going to switch gears and talk about the value of a spreadsheet and what it misses. First, the scale. FIFA reported record attendance of over 6.8 million people across 104 matches with 99.7% venue occupancy. That's almost 100%. A recent Wall Street Journal essay about the economics of the tournament offers a useful distinction. Standard economic measurements can ask what the event did for spending, employment, or output. They can still miss the human value of people meeting, celebrating, and seeing one another differently. So no single P&L can measure all of that. The emotional scoreboard and the financial scoreboard answer different questions. So like I said before, seeing Cape Verde score that goal, it meant a lot to me, considering my wife is from that country. And about Haiti, I'm Haitian, so for Haiti returning to the World Cup after 52 years and scoring twice against Morocco, that was also a special moment for me. For Adidas and Nike, though, the commercial question remains. Could they turn the moment into available product, full price sales, profit, and cash? I'm going to talk about Adidas' financial scoreboard, you can say. So if you start at the top of Adidas' income statement, this quarter ended June 30th, while the tournament continued through the July 19th final. In the second quarter of 2026, net sales were 6.743 billion euros compared with 5.952 billion euros in the second quarter of 2025. That is an increase of 791 million euros and Adidas' highest quarterly net sales on record. Now walk down one line at a time. Gross profit increased from 3.077 billion euros to 3.540 billion euros. That's a 463 million euros of additional gross profit. And then other operating expenses increased as well year over year. Operating profit increased as well, and it increased by 28 million euros. And operating margins fell from 9.2% to 8.5%. So the waterfall is sales up, gross profit up, other operating expenses up, and operating profit is up. At the total company level, it's 28 million euros divided by 463 million euros. It's about 6%. So in plain English, roughly 6 cents of each additional euro of gross profit reached additional operating profit this quarter. It does not prove the World Cup campaign failed. It is an income statement conversion measure across the whole company, and it tells us where to look next. Operating overhead increased as well, and this is primarily due to the e-commerce shipping, distribution, additional staffing in stores and warehouses, as well as the World Cup pop-up stores. In layman's terms, the lesson is creating demand costs money, and fulfilling that demand costs money as well. Now, my take on this as a fractional CFO, I like to look at these waterfall charts just to get a sense of the dynamic of sales and profit versus expenses. And you can see that sales and profits both increased, but there's a thin incremental conversion. So now I'm going to talk about the balance sheet. And for non-accounting folks, that's essentially, for me, just a snapshot in time of the business. It shows the assets, liabilities, and the equity. So at June 30th, inventory was up 13%, and operating working capital was up 18%. Adidas said that it prioritized availability of the World Cup products over short-term inventory optimization. So that trade-off matters. Too little inventory and you can miss the sale. Too much inventory and you can trap cash, invite markdowns, or carry the wrong product after the moment passes. My take on that, essentially, as a fractional CFO, just-in-time inventory helps with managing capacity and utilization. In cases like this, capacity has to meet the demand without outrunning the balance sheet. Now, when it comes to Nike, Nike gives us the opposite pressure test. Nike said its World Cup stories generated 1.5 billion views by the first week. It also said it had sold 2.5 times as many kits by the start of the tournament as it had at the comparable point in the 2022 World Cup. That demand was real, but the Wall Street Journal reported that many versions of the U.S. jersey sold out about 2 weeks into the tournament, and that restocks arrived after the U.S. team had been eliminated. The Journal also reported shortages for other teams. Nike did not disclose how much revenue it may have missed, so the episode does not invent that number. The stockout can protect scarcity and reduce the risk of excess inventory. It can also leave a willing customer with nothing to buy at the exact moment demand peaks. Now, this is not an Adidas versus Nike profit comparison, since their reporting periods, business mixes, product portfolios, and sponsorship footprints are not as equivalent. Nike is here for one reason: to expose the operational gate. So Adidas accepted more inventory and working capital to support availability. Nike created major demand, but reportedly lacked enough of some high interest product at the decisive moment. So two different constraints, but one commercial chain. Here's what owners should remember. Attention creates the possibility of demand. Demand has to meet available inventory or service capacity. Availability has to become a full price sale. The sale has to produce gross profit, and gross profit has to survive marketing, fulfillment, and overhead to become operating profit. Operating profit still has to convert into cash. If any gate breaks, a campaign can look successful at the top and disappoint at the bottom. For a product business, that might be traffic without inventory, orders without fulfillment, or sales bought with too much discounting. For a service business, it might be attention without qualified leads, leads without staffed capacity, or revenue growth without delivery margin. Attention is not revenue, revenue is not profit, and demand you cannot fulfill is not a sale. After your next campaign, launch, or growth push closes for the month, take 10 minutes. First, put revenue growth beside the prior comparable period. Second, put gross profit growth beside it. Third, put operating profit growth beside that. And fourth, identify the additional marketing and fulfillment expense. Fifth, add one operating constraint and one cash observation. If you sell products, use stockouts or back orders and note whether inventory absorbed cash. If you sell services, use utilization or customer wait time and note whether receivables absorbed cash. Then ask one question: where was the biggest drop-off? The conversion check itself uses the P&L, balance sheet, and one operating measure. So going back to that 103rd minute and just reflecting on how I felt and how Cabo Verde and Haiti performed, just that moment and what it meant to me. It was a special moment, and I'm sure it was a special moment to a lot of other folks. But I feel like in terms of how Adidas and Nike how they needed to measure that moment. Did they do an optimal job of measuring it really well from a financial perspective? So those truths can both exist together. The World Cup can create a memory no financial statement will ever capture. Now, in terms of your business, where does growth usually get stuck in your business? Demand, capacity, margin, or cash? My name is Donnell. I have my own fractional CFO business. Now, if you want someone tracing that conversation chain with you, the Jevity link is below. Remember to like and subscribe. Thank you for vibing with me during this video, and stay tuned for further videos.